Nvidia giving strong guidance as sales growing nearly 80% on the back of strong AI demand, but we are seeing shares of Nvidia slip just a day after the company reported its highly anticipated quarterly earnings. Here to break it all down once again is Gil Luria. Gil is the head of technology research over at DA Davidson. Gil, appreciate your time. It's a busy day and a busy week. I feel like this was one of, if not the biggest catalyst for the market in the first quarter. Talk to me about your top takeaways, and are you surprised to see sellers kind of dominate the day after?
Not really. The result was very good, to be clear. The demand for NVIDIA's products is still off the charts. It really is. They can't deliver them fast enough, and they're spreading the wealth around, which creates scarcity. So that's all still going on. But there's a little bit of a sense that this is as good as it gets. In terms of that demand, if you think about their big customers, Microsoft, Amazon, Google, Meta, Elon Inc., etc., they increased their capex in the fourth quarter over the third quarter and over the previous year at the highest rate they've ever expanded it. And so that's what drove the great quarter for NVIDIA. The problem with that, the challenge with that is going forward, they're not going to keep going at that pace. Microsoft has already said, we're going to keep our capex flat for a couple of quarters. Amazon said, we're going to keep our capex flat for the next 4 quarters. That's 2 of the 3 largest end customers for NVIDIA. So this quarter may be as good as it gets in terms of customer demand. Then in terms of China, this may be as good as it gets as well. We are pre-regulation on further restrictions on selling NVIDIA chips into China. Let's not forget that the Biden administration tried to get some done at the end of their term, and now the Trump administration is even more motivated to do so after seeing that DeepSeek happened in spite of the restrictions that already happened. So this overall sense that this may be as good as it gets for NVIDIA.
So let's start with those largest customers. For now, so many of them have said, with regards to your comment on CapEx, they're going to continue to spend, at least for right now, anywhere between $65 billion to $100 billion a year. That's for the 4 biggest customers, Amazon, Alphabet, Microsoft, and Meta. But Gil, the big question to me, and I think a lot of others, is then what? What does this time next year look like in terms of that future guidance for the company and all of the investors and everyone who jokes there and says, hey, NVIDIA is kind of carrying in many ways, not just the market, but parts of the overall economy on its back?
So I would, first of all, I would separate that last part, which is to say, NVIDIA had carried the market, right? If you think about the earnings growth of the S&P 500, a disproportionate part of that last year was from NVIDIA. That's why the stock performed so well. The multiple didn't expand, the earnings grew. And so they carried the market. They got added to all the indices that self-perpetuated. They did drive market performance. Not clear that they're driving much of the economy yet. There is a lot of activity. Obviously, their customers are buying from them, but there isn't that much activity that's been generated off of AI. I mean, we have OpenAI at maybe 5 to 10 billion run rate right now. We have the hyperscalers renting out capacity, but not for productive use so far, mostly for experimentation and pilots and things like that. So NVIDIA is a bellwether for the market. It's not necessarily a bellwether for the economy. And then in terms of those large customers, they'll be increasing their spend tremendously this year over last year. But again, I think that I'm making a subtle point here, which is they've already done it. This fourth quarter run rate is already much closer to the run rate that we're going to have in 2025. And since NVIDIA only guides 1 quarter at a time, that increase in guidance and those beats are going to get harder to make, especially since the numbers are getting bigger. The consensus expectations are that NVIDIA adds $4 to $5 billion every quarter. And then there's some expectation that next year they'll add 15, $20 billion every quarter. So expectations are so high where those big customers are not communicating that message. Again, Microsoft already starting to communicate that they're flattening out. Amazon communicating they're flattening out. It's a matter of time before Google catches up to that. And then there'll still be some large customers, but those are 3 of the 4 or 5 largest customers for NVIDIA.
Gil, what were the largest negatives out of this report, in your opinion?
I think the other part of the reaction today is to gross margins. I think we all got excited last year when, as Nvidia scaled, they raised their gross margins. They hit the mid 70s, and we thought that that was not only sustainable, but possibly they could expand from there. And what we've learned is that every time they transition a product, they take a big hit to gross margins. And as they transition to Blackwell, which is a great product, bigger, faster, more powerful, more energy efficient, it's all good. Only it comes in at a much lower margin as it ramps up, and it was a drag last quarter. It's going to be a drag this quarter. Now we're talking about being more in the low 70s on gross margins, and that's the one part of the earnings report that was actually a disappointment.
What did the report show us about that DeepSeek fueled sell-off last month? Any concern here that those fears were warranted, or perhaps did we learn a little bit more that maybe those initial fears from a few weeks ago were a bit overblown?
So if somebody thought that the emergence of DeepSeek means people are going to stop buying chips right now this year, they were probably misguided. The impact of DeepSeek is much more about the longer term impact. The longer term impact is that as models get smaller and smaller and smaller, we're going to need less compute. And if the model gets 30 times smaller, we need 30 times more demand to make up for that. And even more importantly, and I think this point may have even gotten missed in spite of all the noise around DeepSeek, when the models get small enough, they can run on a device. They can run on a Mac Studio, they can run on an iPhone, they can run on a PC at some point, which means we're not going to do most of our AI calculations in a data center at all. We're going to do most of the AI calculations on a device. If somebody thought that was going to happen immediately, they were getting ahead of themselves. That doesn't mean that's still not where this is headed in a 2, 3, 5 year time frame. And if we're doing most AI on a device and not in a data center, then we don't need to build as many data centers. And medium to long term, that will have an impact on Nvidia.
I know that you still expect 2025 to be a huge year for the company. Why is that the case? Or is that still the case? And if so, why after the report?
Yeah, because those budgets are already in place. Again, Microsoft knows what they're going to spend this year. So does Amazon. Google's committed to a spend for this year. Meta is committed to the spend. They already have the planes in motion. The data centers are getting built. They put in the order for the GPUs. It's not really, the question really isn't about this year anymore. This year should be a great year for Nvidia. The question is this peak year, or maybe even are we going to plateau or have much slower growth into next year? Again, consensus expectations is this is going to be a massive year. And then we're going to go 20% on top of that, and then 20% on top of that over the next couple of years. That ignores the fact that Microsoft, Amazon, Google, again, those largest customers can't do that. If they continue to expand at these rates, they're going to start really eroding their own margins, their cash flow, and the return on invested capital. There's only so much they're willing to do that. They've been willing to do it the last couple of years because it's been a great data center build-out race. But we're starting to get the signals that that's coming to an end.
Gil, Nvidia is still nearly 6.5% of the entire S&P 500. Does that consolidation, the state of that consolidation, concern you? And if now, do you kind of eye maybe a few quarters out and say maybe it's not a big deal right now, but hey, going forward, given what you've heard out of the Microsofts of the world, maybe that consolidation for the overall market does become a bigger problem in the not too distant future?
Yeah, I think that's how we're thinking of it, is that right now Nvidia seems to be properly priced. Our price target's $135, 30 times next year's earnings. As long as they can continue to deliver the growth that's being expected out of them, they're fine. The stock will be fine. It'll perform with the market or with their peers, and we don't have an issue. The question comes, if we're correct in the downside scenario where CapEx is actually lower next year than this year, earnings are going to be far lower, and then the multiple on that's going to be far lower. And there's a lot of downside. If in a scenario where they only make, let's say, $3 a share next year because revenue is declining, they'll only trade at 20 times that. That means the stock could get halved. And to your point, if Nvidia shares are 6.5% of the S&P 500, and there's a quarter where their revenue declines and people have to cut their estimates, that'll impact the whole market.
Can I confirm, did you say your price target's 135? I want to make sure I didn't miss that.
Yeah. Again, if they can continue growing at these rates, that's not a outrageous multiple on next year's estimates. We just think that there's a scenario out there where next year's estimates may be way too high. In fact, our numbers are street low.
So, Gil, we talk a lot about the relationship between President Trump, the Trump administration, and people like Elon Musk, Jeff Bezos, Sundar Pichai. Fill in the blank here with your billionaire of choice who was there front row and center at the inauguration. We did have a visit, if I'm not mistaken, from Jensen Huang to President Trump, but there's this world of ambiguity about what tariffs on semiconductors are going to look like, restrictions, export controls, things like that. What should investors think or pay attention to as it pertains to the relationship, even if it's the personal one, between President Donald Trump and Jensen Huang of Nvidia?
Yeah, something's going to change. Something happened. What did Jensen promise is the big question. We've seen this. Tim Cook visited the White House and came back and promised to invest $500 billion in the U.S. Mark Zuckerberg visited Mar-a-Lago, came back, called his company soft, and hired Dana White for the board. Jensen Huang promised something. He just hasn't told us what that is yet. And if he doesn't do something about sending chips into China, this administration will. It's unacceptable that we are continuing to send advanced Nvidia chips, maybe not the most advanced, but advanced Nvidia chips. And many of the most advanced Nvidia chips are still getting to China, which is why they had the state-of-the-art open source LLM model. If we're in a competitive situation with China, which we are, this administration is going to consider that unacceptable. And if Nvidia doesn't do something about it, this administration will.
Gil, what is the biggest part of the Nvidia story that you think we are not talking enough about right now?
I think those are the big topics, right? The topics are where's demand, what's going to happen with China, gross margins. I'd say the other big topic that, again, has more of a medium to long-term implication is competition. The most immediate type of competition is coming from NVIDIA's biggest customers. So Amazon, Google make their own chips. And up until a year ago, that was broadly dismissed as, yeah, they make it, but it's really just for internal use. And it's completely separate than them buying NVIDIA chips. Where what we've realized over this last year, that's not the case anymore, is that those two companies are now providing access to their chip capacity, to their compute capacity, in addition to providing NVIDIA. And Google is providing services to Apple on its TPUs. Amazon's providing services to Anthropic on their ASIC chips. And so competition is already here. It's gaining share. And then on top of that, there are many startups that are aiming at NVIDIA's market. Cerebras is going to go public soon. There's going to be Sambanova and others. Blaze already has a product for AI compute at the edge. So there'll be all these upstarts that start eating at NVIDIA's market longer term. In the short term, it's really two of their biggest customers, Amazon and Google, that are shifting more and more of their AI workloads to their own chips.
How much does the geopolitical uncertainty, not just China, but Taiwan more specifically, concern you? And what should NVIDIA investors, even retail investors, keep in mind as they kind of try and track rhetoric out of the Trump administration, the White House down in D.C., specifically on Taiwan? What a crucial company or a country, and a lot of their companies like Taiwan Semi and many others, to the overall semiconductor space.
Yeah, that's absolutely right. So Taiwan Semi is critical for everything. Every device we have has componentry that was made by Taiwan Semi. Our phones, our computers, and our data centers. And so any risk to Taiwan from a geopolitical perspective, any risk from China towards Taiwan should scare us on many levels. And then specifically to NVIDIA, their chips are almost entirely made by Taiwan Semi in Taiwan. If we put tariffs on imports from Taiwan, that would impact the price of those servers and those chips from NVIDIA. Not sure that's the way we're headed, but it's hard to tell these days.
Gil, I know you're still a big fan. I believe you're still a big fan of a lot of the big software infrastructure companies, Datadog, Snowflake among them. What do you see in those names that support any kind of overall AI thesis that you have going on these days?
Yeah, no, that's exactly right. I think this is where we're at on the AI trade. If the AI trade in 2023 and into the first half of 2024 was mostly Nvidia and somewhat Microsoft, there was a handoff to software over the summer and into the second half of last year. There was a pretty broad handoff. We've had a lot of volatility since, but where we're at today is the one category that we know is working is infrastructure software. To your point, Snowflake and Datadog being very good examples of that. The reason is that in order for us to make any of this AI stuff happen, we need to have the data in one place. If you're going to use an LLM internally to go through documents, to go through data in order to give you insights and reporting, you actually have to have access to the data. Unless you're putting all your data in a cloud data warehouse like Snowflake, you just don't have access to it. Not immediately, not through retrieval augmented generation. And so one way or another, you have to use Snowflake. And then as you create those workloads, you need to monitor them. You need to make sure there's no anomaly that you've brought on board by using AI and by using these models to generate sometimes black box content. And for that, you need companies like Datadog. So regardless of what we do with AI, these are the types of companies that are going to benefit from that well before the software companies that make applications, because those applications are still early on. We're still in the stage of transitioning our enterprise technology software to a point where we can even use AI. It's going to be a while before applications are so important and so prevalent and scaled to a point where that's going to be impactful. And those stocks like your Salesforce, which had a disappointing result last night and will probably continue to disappoint this year because their product's not ready for prime time because their customers don't have the infrastructure yet.
Fair enough. Gil, to take us just a small step back away from Nvidia, a bigger picture look at things, the narrative has shifted a lot. It's impossible not to notice in the markets in the last few weeks. I mean, Fed speak overall has gotten a lot more hawkish. We had all this optimism, inflation was trending in the right direction, and then suddenly headline CPI coming in 3%, if not a little bit higher. We got all this uncertainty with tariffs and the changing of the tax code in Washington. For any investor who maybe has been more bullish in the Nvidia or the overall AI trade, are there other parts that you would recommend kind of a rotation into? Are you a fan of small caps in this particular environment? Are you a fan of some of the other sectors that maybe haven't gotten as much love the last couple of years that could be front and center, or is this still your main focus for the time being?
Yeah, so again, we have a big preference for AI infrastructure software. We also think that within the mega caps, Nvidia isn't the only place to be. Amazon, Apple, Meta are in a great position to benefit from AI while having a strong business to begin with. Amazon's retail business is doing great. It's never been this profitable. It's never been this consistently profitable. AWS has now caught on to being able to provide AI services on top of what they already had in terms of AWS growth. And now they're introducing AI into their consumer set with Alexa Plus and with Rufus. So they're doing a great job at balancing retail with AWS. They're doing phenomenally well. They'll continue to do that. Meta has a great position in terms of continuing to grow its share of advertising. And even within digital advertising, they're still growing their share. There's little reason to believe that's going to stop. They're using AI to make their products better. They don't need to rent it out to somebody else to make their products. They're using AI to make ads more compelling and therefore being able to charge more for that. And then for Apple, it's just a case of if you believe what we do, which is that those models are getting smaller and will eventually be on a device, consumer AI is going to be delivered through Apple devices. It's already starting. We may be a little disappointed at the rate that Apple Intelligence has rolled out, but if you're paying attention on your phone, you see that it keeps getting better a little bit every day. Email summaries, pre-population, and that's going to eventually drive an iPhone upgrade cycle, which is the way Apple stocks move. So plenty of places to be, even if we are concerned about some of these things.
I gotta be honest, it's just anecdotal. I actually literally today just dismantled my Apple Intelligence on my computer because I didn't like the little pop-ups, and it was like kind of encouraging me to, kind of fill in little things that I didn't think should be there. Final question for you. I don't know if we're all hearing this music that I hear. Nvidia's GPU technology conference, Gil, should be the next big catalyst for the stock. I believe that's scheduled for March 17th. That will include a highly anticipated keynote from Jensen Huang. What will you be looking for there out of that conference?
Yeah, so we want to hear details about the next generation product. So for this year, Blackwell Ultra. For next year, Rubin. What is the performance improvement? What is their expectation for? Can they do that with less production issues? So holding on to gross margins. That's going to tell us a lot about their ability to deliver on the supply side over the next couple of years. Those other questions that we're asking about NVIDIA, they're not really going to be able to answer. They can't tell us how much Microsoft is going to spend in 2026 on CapEx. So all they can talk about is the market opportunity, which is there. And they can't tell us anything about China until they either have a deal with the administration or the administration lays something out. So the focus will be on the products, their performance, and their cost benefit to their customers.
All right, I'm really grateful for all this time today. Obviously, this was the big one that we were looking for in the markets, and we'll continue to see what investors have in store. They continue to digest these anticipated earnings out of NVIDIA. I'm very grateful for your time. That's Gil Luria, friend of the show, head of technology research over at DA Davidson. Gil, thank you as always. Good to have you.
Thank you.